Today, folks, we gotta have a very serious conversation because the stock market is likely going to crash in the next quarter. Now, I don't know if that's actually going to come into fruition, but if Netflix earnings are any indicator toward that, we got some scary data we're about to look through here, folks, because we're going to go into the Google Trends search traffic for the likes of the biggest conglomerates on the planet, whether it's Amazon, whether it's Shopify, whether it's Google, Facebook, Nvidia, and we're going to see what the future in that crystal ball of earnings for Q1 will likely look like, because we all know, if we listen to the YouTubers out there like me, Kevin, we heard that the market's bottomed. The stock market crash is over. Everyone should buy the dip. But my God, my goodness, my gracious here, folks, Netflix, like I said, guys, this is the first FANG stock to kind of post earnings. And if you look back over the last year here, we're like, oh man, what a great dip buying opportunity. It's already down 50% from its highs. It can't go any lower than that. But as I always mention, stocks can always go lower. They can always surprise you. And sure enough, that earnings being a mixed bag of, decent EPS, decent rev numbers, but they're slowing down in subscriber growth here, guys, and actually losing subscribers. It tanked the stock by 26% into after hours. Unbelievably painful. And a lot of this kind of saw some predictive, insight here coming from Google Trends. And this is just the search traffic of people looking this stuff up on Google. And we can see that actually Netflix has slowed down back toward its 2019 search traffic levels. So it's been cooling off ever since the peak in the middle of the pandemic. Now, not all the search traffic we're going to look at looks like this, but there's a lot of similarities in things like Amazon. I mean, this e-commerce conglomerate here, guys, has been holding up fairly well with the rest of the market, but it as well has seen a very continual slide in the search traffic going all the way back to the 2019 lows here. So if Netflix saw that, maybe we'll see this as well with Amazon, which has its earnings coming up on April 28th here. Now, Apple, oh my God, guys, this is the gem of the gems here. This is one that I'm praying to God dips. Many of you know I've been adjusting my portfolio. Many of you have been calling me out. Why are you selling your tech, Kyle? You crazy? Why are you in and out of companies all the time? I don't know, because I'm freaking nuts. But maybe, just maybe, the opportunities that I want to buy at what prices I want to buy it could come into fruition. I scaled Apple, Microsoft down at the beginning of this year, praying to God that they come down in value, and this earnings could be that period for me, because I left about 30% bleed room. So if these companies tank, I actually have money set aside right now to buy Apple. But Apple has kind of this real kind of consumer pricing power, because everybody will always buy a new iPhone. I upgraded my iPhone. I bought a MacBook. I'm looking at getting an Apple Watch. So I don't know how bad their earnings could be, but the search traffic is kind of showing a leveling off. Not nearly as a decline. It's kind of been the same through the pandemic minus this one peak here. So I don't know how Apple's going to do. I pray it tanks. Most of you might not, but I pray it does. But their earnings are April 28th. Now, Microsoft in the other tandem has been seeing consistent slowdown in search traffic. So it'll be neat to see how that pans out, but they're not back to their 2019 search levels. So they could still be doing relatively okay. And their earnings come up on April 26th. Now, the companies that I'm highly fixated on have been the advertiser plays, because many of you know I'm now sitting on the sidelines with Facebook and Google, which again, I do want to buy them back. Don't get me wrong. People were calling me out saying, oh, well, you always made fun of people tax loss harvesting, Kyle. And I was making fun of them because I said they use it as an excuse to never buy back into the company. They're just like, oh, well, I don't have to pay tax. I might as well sell it. I'm down. I want to buy back into Facebook and Google, but I also don't want to pay tax. So I'm taking a 30-day leave from my Facebook position to hopefully buy it back at a better price. Well, it's already at a good price, so let's be real. And let's talk about that in a second. But Shopify, first and foremost, guys, would be my bet going into this earnings period if search traffic has anything to say about it. And it's not a one-for-one. So I've seen search traffic do great and the numbers do terrible. And I've also seen search traffic down and then companies post really good numbers. But it's kind of just a brief insight. It's kind of looking at like futures. Ever look at stock futures and being like, oh my God, the market's going to be red tomorrow, and then somehow it's green. It's not a one-for-one comparison, but it is fun to look at. And Shopify's numbers here, guys, have actually been up over the year. I mean, they're holding way higher than their 2019 levels, and they continue to. So if I was going to make a bet on one of the advertising or e-commerce plays, Shopify takes the bucket here in their earnings coming out May 5th. So I'm going to watch this one aggressively, because this is one that I have wanted to add for some more Canadian exposure to a tech company. Right now, let's talk about Google and Facebook. So when I'm looking up how well I think Google or Facebook's going to do, you only want to look up Google ads or Facebook ads, because that's what I personally search, and I use their products aggressively. And I've been very fearful because Facebook said they were seeing a slowdown in conversions on their small ads, like people running small ad budgets, right? So that was very concerning to me. And Google here, just taking a look at the search traffic side by side for people looking up the advertising tools, it is really leveled off. I mean, Google saw a massive run-up period going all the way into the pandemic. It looks like we saw a peak in the midst of 2021, and ever since it fell down pretty drastically and has flatlined ever since. Not back to the 2019 levels, but we are hovering in this trend. So it'll be neat to see how they compare over last year during these peak periods. So something to be kind of concerned about. Facebook's actually been boding pretty well. Again, they peaked in the the pandemic era, but again, they've been holding relatively flat from people using their advertising tools. So that's a good sign because we're not really seeing the 2019 levels. It's actually holding above that 2019 line. So that could also be very well. And if we take a look at Google, they're posting earnings April 26th. Facebook is April 27th. And then taking a look at the chip makers here, the one that I pay most attention to is Nvidia, another company I would love to buy. And this is one where I wouldn't trust the search traffic per se, because a lot of big automakers, conglomerates, all these huge people that are huge conglomerates that need chip manufactured, they're not really Googling that stuff, right? They're just kind of calling the company up saying, hey, how many chips do I need? How much can you make? When can I get them by? Whereas I think most of the search traffic might more or less be for video editors, gamers, people that are finally trying to get their hands on Bitcoin miners, things of that nature. And as well, just like, Amazon, Netflix, we are seeing a slowdown back to the 2019 era of search traffic, and it's been holding below that line since the middle of 2021. So that could bode in any direction. Nobody really knows here, but their earnings are coming out on May 25th. So aside from that, what is good news? I mean, this isn't the best news. This isn't going to be fun news. It's going to lead to a volatile stock market. But where the news is good, is kind of good, is in the inflation rate, because I've been petrified that I wish they would just put us in a recession. You just raise the interest rate up drastically, let it be over with, let things sort themselves out. But no, we're going to cushion our way into raising interest and seeing how the inflation works out. And I have to say, I think inflation has peaked. Outside of that bad news, the good news is when I look through the entire commodities market, whether we're talking like crude oil and energy being primarily one of the primo factors to the inflation rate, everything has kind of leveled off. It all peaked about in this quarter since the geopolitical event took place. And we're not seeing like these all-time high 20-30% run-ups month over month. So that should bode that, things may level off. And it's the same thing with wheat, same thing with lumber, all the major commodities, guys. They've all started to level off. So if it stays that way through the going quarter, that means the next inflation numbers will likely be tame at best. So hopefully that's a good thing. Another good thing is we're seeing the savings rate go up. So JP Morgan, mixed earnings there as well, said that we're seeing a drastic increase in people saving money, which probably that comes out of fear. And that also comes into people spending less money on products, which could also lead to a recession. And again, a recession isn't necessarily a bad thing. It doesn't mean the stock market's going to do horribly. But nonetheless, guys, this has been one of the craziest periods. I keep saying that. I feel like I've been saying that every year. We're in the twilight zone. Nothing's normal anymore. This is the new normal. Volatility and insanity, and no one really knows what we're walking into in a world. It could be a new world war for all as we know, damn it. But at this point, I want to pass the question off to you guys. What do you think about this? How are you prepping for earnings period? Now, many of you know I have been like a squirrel fixing around with different stocks, and I'm an active investor, right? So if I think Facebook and Google aren't going to go higher in the next quarter, maybe I'll take a break from it like I did. I'll take some tax loss harvesting. I'll give it a month. We'll see where we're at. Maybe we're a little higher, maybe we're a little lower, but I'm on the fence that we're going to be lower than we are higher. So take that into consideration from a YouTuber that has no financial education, that could probably be more comparable to Jim Cramer, where half my bets may be right, but most of them might be wrong. And I'm not here to sell you on a stock. So stay cool, stay awesome. And as always, I look forward to catching you in the next one.